Welcome back to Crypto Journal. We're thrilled to have you here. Hi guys, I'm Manuel, a young trader. I bring you this fresh news to update you on the world of cryptocurrencies.
And spinning up what ETFs can trade over in Europe, and basically releasing a whole number of products in this space while keeping an eye on the regulatory situation in the US and updating our filings as the regulatory environment changed. So a couple months ago, it became clear that the SEC was willing to consider a futures version of an Ethereum ETF, much like
proving, and the trends are moving that way. Look, 2 years ago, we had no crypto ETFs. Then we got Bitcoin futures ETFs. Today, we're getting Ethereum ETFs and blended ETFs. The next stop is spot Bitcoin, eventually that spot Ethereum. We're going to get there, and the progress is accelerating.
There's only a few months.
Picture this, a groundbreaking moment in the world of cryptocurrencies, where the lines between traditional finance and digital assets blur. It's not just a distant dream, it's happening now. The recent news that Cathie Wood's ARK Invest filed for the first spot Ether, ETH, exchange-traded fund ETF in the United States marks a pivotal turning point. It signifies not only the opening of doors for institutional investors, but also the dawn of institutional liquid staking. Why is there excitement over an ETH ETF? The answer lies in the resounding demand from investors seeking to integrate digital assets into their portfolios. While investors are hungry for these opportunities, current offerings fall short. US investors eyeing a spot Bitcoin ETF have to look beyond American shores.
2 months left in the year. What you really think it's that soon?
I'm hopeful. I think there is a real chance. If not this year, then early next year. Of course, no guarantee, but we're making real progress. We just submitted 40 pages of research to the SEC answering their questions. So I am optimistic, and this is an opportunity for investors to invest today.
Grayscale's GBTC has consistently traded at a 20% discount to its net asset value. When an investor purchases GBTC, they're not just buying Bitcoin exposure, but navigating the complexities of liquidity in the crypto market, a daunting task. The global demand for a spot ETH ETF becomes even more evident when you look at the thriving exchange-traded product, ETP, markets in Canada and Europe, boasting a combined market size nearing $33 billion. This is nothing short of a seismic shift in the world of global finance. Zooming out, we see macroeconomic forces at play with industry giants like BlackRock embracing crypto. Combine that with PayPal's push into the stablecoin arena, and the result is undeniable pressure on Congress and regulatory bodies like the Securities and Exchange Commission, SEC, to create a viable framework for digital assets. But where does liquid staking fit into this picture? A spot ETH ETF, if approved, could induce demand from institutional traders, who will then likely scramble to participate staking. Simply holding ETH won't be enough. These institutions will pivot to staking, looking to give their investors a higher return on their ETF holdings, especially on a deflationary asset. If the approval of a spot ETH ETF opens a floodgate of institutional investment, institutions will be eager to participate. This is principally because of recent innovations made in Ethereum staking. Stakers can retain liquidity even while locking up their assets using a liquid staking protocol that gives users a tradable token, something institutions cannot get when locking up capital in government bonds, for instance. Typically, asset managers gravitate towards shorter redemption periods, aiming for a daily cadence if possible. Liquid staking allows people to stake and earn yield while retaining liquidity, often without a lockup. This preference for shorter redemption periods stems from minimizing the net asset value discounts, avoiding liquidity challenges, and the operational burden of managing staking and unstaking. Given the period of time to withdraw a staked ETF is variable, from 5 to more than 30 days, these managers will need a solution that offers the ability to process daily redemptions while providing their investors the benefit of higher returns. Institutions will seek a solution through compliant and security-focused liquid staking tokens that offer liquidity, a diverse node operator set, and operational efficiency. The best way to manage staked ETH positions with shorter redemption periods is through a compliant liquid staking token. Approving a spot ETH ETF isn't just likely, it's necessary in crypto's march to mainstream adoption. With the underpinnings of institutional demand beginning to take shape, It's time for US regulators to take notice and approve ARK Incest's Spot ETH ETF.
I do think that institutional investors are quite aware of Ethereum's value proposition.
And I want to go over to this first article. SEC's Grayscale Bitcoin ETF appeal window is closing on Friday. This is a big deal because we could actually see an approval of an ETF on Friday. And that is if the SEC just doesn't say, okay, we're going to push this back. So clock is ticking down to this Friday. Window for the US or SEC to appeal the Grayscale Bitcoin Spot ETF ruling by the US District of Columbia Circuit will shut, meaning it automatically gets approved if they do not do it.
The first Ether futures ETFs went live today, and the overall performance was, unsurprisingly to some, rather muted. Volumes today were nowhere near the volumes the inaugural Bitcoin futures offering saw 2 years ago. 6 Ether futures ETFs launched by ProShares, Bitwise, and VanEck saw trading volumes of roughly $2 million, according to an analysis of Yahoo Finance data. The ProShares Ether Strategy ETF, ETH, led the way with nearly 900,000 in daily volume, while VanEck's Ethereum Strategy ETF, EFUT, eclipsed the 400,000 mark. The Valkyria Bitcoin Strategy ETF, BTF, which is set to change its investment strategy to add Ether futures exposure to the fund, starting Tuesday, saw roughly 4.5 million in volumes. Monday, Yahoo Finance data shows. Bloomberg Intelligence, Eric Balchunas called initial Monday volumes of the funds pretty meh in an X post, noting that the first Bitcoin futures ETF did about $200 million in its first 15 minutes. That fund, the ProShares Bitcoin Strategy ETF, BITO, launched in October 2021. It saw roughly 950 million in trading volume overall on its first day and reached 1 billion in assets under management in 2 days.
In the sense that they are very pro-ETH. And I think that obviously they have to be pro-Bitcoin and digital assets in general, but the fact that they have so much on the ball around Ethereum and some of these new projects, much like an ETH and Sol, I think is still a good sign for them maybe leading the digital assets.
This is pretty average day one volume for most ETFs, but arguably disappointing considering how much BITO did. Balchunas told Blockworks. That said, it is futures and it is Ether, very different than a spot Bitcoin ETF, which we expect to fare much better out of the gate. Simeon Hyman, global investment strategist at ProShares, said it isn't fair to compare the first Ether futures ETFs to BITO. The bar can't be BITO. That is a historic, once-in-a-generation type of thing, Hyman told Blockworks. We know that the futures solution in an ETF is an efficacious one, as BITO proved that. We know that Ether is an important number to cryptocurrency, and we're optimistic that the 3 ETFs will grow nicely over time. Bitwise Chief Investment Officer Matt Hoogan noted during a Monday webinar that BITO launched at the height of the last bull market. Bitcoin's price hit its all-time high of roughly $69,000 in the month after the ProShares fund launched. During bull market peaks, there's a huge amount of pent-up demand, and I think that was a major factor, Hoogan said. Bitcoin is a larger asset than Ether, the chief investment officer added. Bitcoin's BTC market capitalization stood at $543 billion on Monday afternoon, while Ether's ETH was about $200 billion. I'm feeling fairly good about the current state of volume in this space, Hoogan said. I suspect we'll see these ETH futures ETFs grow substantially over time. Nina Mishra, director of ETF research at Zacks Investment Research, is not so sure about the long-term demand for such products. Many investors are now just waiting for pure exposure via spot ETFs instead of investing in futures ETFs, she told Blockworks. There are now hopes that we could see a spot Bitcoin ETF approved much sooner than earlier anticipated. The debut of Ether spot ETFs would not be far behind. If you liked the video, please give a thumbs up and subscribe to see upcoming videos. That's all from Crypto Journal. See you soon with new news.